Hi there traders, this is Steve Miley for FX Explained and we're now entering the Forex Zone. This is our regular weekly review of the major currency pairs, EURUSD, pound dollar, US dollar versus Canadian dollar, Australian dollar and New Zealand dollar, and also US dollar, Japanese yen. And in here we have two main themes that have run through the last week: US dollar weakness and recent pound, UK pound strength. So here we see the US dollar weakness versus the euro, EURUSD pushing higher in here since the beginning of October, a consolidation for the early part of this week and then a surge higher, a more emphatic reversal of this down trend line, also taking out this 110.25, 26 level, back up with a 110 big figure, aiming now at 110.33, 34 today, an upside risk through there towards 110.82, 111.10 up here remains the critical level to monitor. Probably not today, but certainly going into next week. Above here sees then an intermediate term bullish shift. Let's turn our attention to the surging pound in here now. Pound dollar, an aggressive move higher over the last 24 hours on hopes of a deal being done, a Brexit deal being done before the end of October deadline. A surge higher with positive outcome from the talks between the UK and Ireland. That leaves the threat to the upside going into the day. 124.69, then 125.03, a critical level up here at 125.82, even a potential target for today. Let's turn to US dollar, Canadian dollar, kind of a bit sideways in here throughout the last week or so after this surge at the beginning of October up through these down trend lines. That still leaves an underlying positive tone, and despite the dip lower yesterday, the rebound here from 132.65 leaves a slight positive bias for a move back up here towards 133.48. For the Australian dollar, a strong recovery as we've moved back into more of a risk-on mode. We've got both the competing or the complementary, factors in here of a move back to a risk-on mode with equity markets rallying, and also a softer US dollar, a weaker US dollar, because there's the perception now that the Fed are going to cut rates before the end of the year. So that's risk on mode allowing Australian dollar higher, equity markets rallying, a better outlook in here for the global economy, hopes on the US-China trade talks, and then also a weaker US dollar because of a perception of a more dovish Fed. That's allowed Aussie dollar up through these peaks in here between 67.74 up to 67.81 over the last 24 hours. 68.09 up here is going to be a critical level. Through there would certainly ease intermediate term bearish pressures, and we see upside still further, maybe up towards 68.29 going into the day and early next week. For the New Zealand dollar, more of a consolidation fill in here, but a positive consolidation, more recently rebounding off a 62.75 support. Upside risk here towards resistances 63, 35, 38 area, but critical is going to be the 63.49 peak. Above there again secures a base, neutralizing intermediate term bearish pressures. And finally, let's take a look at dollar yen. The strong rally in here over the last week, reflecting that move back to more of a risk on mode. And although the intermediate term outlook at the moment is negative because of this whole erratic downtrend that we've had in here from May, certainly this more recent push higher in here leaves risk up to these peaks at 108.45, 108.47, 48, and a real threat for a push up to and through there, and that would signal an intermediate term more bullish tone going into the balance of October. So this has been Steve Miley in the Forex Zone. I'm going to wish you a great trading day. So traders, don't forget to catch us again on the Forex Zone, and also check out all the great content on fxexplained.co.uk.